Hello everyone, welcome back to another video. In today's video, we are going to discuss a scalping strategy that uses a volume profile and footprint charts. So we're going to define zones using the volume profile, and then we're going to fine tune our entries rather using the footprint charts to be precise. So you can see on the left hand side, I have the volume profile for this particular day. That is Thursday, the 30th of May. So this chart is of NASDAQ 100. Okay, so we've chosen this instrument as it is a little volatile and it gives us quick entries and exits considering the volatility of this particular instrument. So before we get into the scalping mode, let's look at what has been happening. Again, this does have its own importance, whilst scalping involves just 5-10 points, taking 5-10 points against 1:1 or 1:1.5. Of course, expecting 1:5 on a scalping trade is not feasible. You can start with 1:1 and look at the market or the footprint chart and then see how the market is playing out and keep trailing your stop loss. That's a really good way to scalp. Okay, so coming out of the markets, what we've seen in the previous few sessions is like you can see there is certainly a downtrend from the past two sessions. What we've seen is the market shift down. In the overnight session, we saw the entire of the overnight session was below yesterday's you can call value area or the range also. Just a little bit of it tested, and the market opened right at the bottom of yesterday's range and on the top of yesterday's overnight session, but it failed and it gave one extreme move to the downside. The interesting part is as soon as it broke the range of the overnight session, it hardly stayed there for 15 minutes and popped up inside. So that is a classic case of look below and fail, even on a smaller time frame. So when something like this happens, you expect it to touch the next low volume node, whichever there is, and or the high volume node, whatever you want to trade. So if you want to know more about the high volume node, high volume nodes and the low volume nodes, you can go out and check out my videos that I've done on it. So essentially what I've done is I marked the low volume nodes that we have on the charts, and why I do that is I would like to we can delete them also. So what I try to do is I would look at these areas where I know I can find some sort of resistance. So let's consider the scenario. What we have over here, we have a VWAP that is coming, and this is the third time, if I'm not wrong, we're testing the VWAP. So again, we are clear on what we're looking on the volume profile chart. Now let's go ahead and move on to the footprint chart. So what exactly are we looking at the footprint chart? So what we want to see is this is a market in which we are primarily going to fade. So what do I mean by that? Even if we are going to go aggressive, we are not. For example, if we are expecting a breakout in the zone, I'm not going to enter here. Okay, what I'm going to do is either I will wait for a pullback like this, see some trapped sellers and enter, or if it breaks, I will look for an area that it tests, which is broken down, or which was a resistance of sorts. You can look at the volume profile. A low volume node, if it goes to this high volume node, comes back to this area, and then I go back to the footprint chart and look at places where I can enter. So for example, let's assume this move to the downside. Okay, so what we're expecting is a touch of 1875, 675, I'm sorry, and what we're expecting is a low volume node and a stop over here. But what we see is the market continues down and it goes to this place. Now when I want to go long, I want to see these sellers that are here get trapped. So I can either if this move is too fast for me, let's say it moves really fast, then I wait for the entry over here, and I have seen an imbalance exactly at this zone, so I will enter there. Okay, so what I've seen is a lot of sellers that have got trapped, and a cluster of volume which was here, primarily sellers getting trapped, which would initiate the move or be the initiator for my move, at least to this POC that was there, and so on. Okay, so having said that, let's go into the current market scenario, and then we look for a place where we can find a scalp either to the long side or the short side, depending on the condition that we have. Okay, so to elaborate the strategy further, what the first thing that I'm looking for during a pullback level is a sort of sellers getting trapped. Okay, so what I mean by that is, if you look at these places, so this is a bar I would like to go long into. Then when this breaks, this I don't think would have given us a chance. The next bar I would like to see is place that I would have loved to take a long is this place, because I see a multiple imbalance, and sellers trapped over there. So what that does is it gives me a place to put my stop loss over here. Now you can see the market breaking out and going into one direction. So some would want to enter immediately over here, but I wouldn't prefer, because this is a market that has been even if you look at the candles, I mean, two red, one blue, one red, then I mean one blue. So it is giving mixed signals. There is no proper movement. Even this candle, these three candles, if you see, they are blue, but they've barely managed to touch this one big red candle. So if you look over here, this one red big red candle, it took almost three blue candles and it's still not taken out the high of that candle convincingly. So what I'm looking to do is fade the moves. So in essence, like I see over here, that this is a zone where I expected or expect to be some sort of resistance. So let's assume that we want to take a short here over here. Okay, so the first thing that I want to see is the POCs here. That means a cluster of volume is attempting to take the market above the VWAP over here. Okay, and there is a buy imbalance here and over here. So if you are planning to take a short, what you would like to see is let me get this marker here. So I would like this to get breached. So that is my confirmation, that is 702 to breach, so that I can enter my short. Okay, and let's wait and see what happens. So if it continues like this, if it is not breaching this 702, I am not interested. And even if it breaks, for example, if it does just touches it, I would like, rather, if I want to go for a short over here, I would rather want to go at a movement like this. So for example, now this has happened. I would now if there is a pullback of some sorts to this levels, I would like to have entered over here. Anyway, if it fails, it fails. So you can see what I'm trying to get at. So the short becomes validated or becomes valid only if it breaks this zone. Okay, why? Because I've seen this buyers getting trapped, and I've seen a cluster of volume getting shifted on top and unable to take the price up, which is a primary motive if we were planning to go long, which has not happened. And whilst we were discussing, we wanted a short which has happened after the 702. Now let's consider a different scenario, since the market is moving down. So you've seen what is happening, so you get a clue of what generally happens. The market makes one or two blue candles or an up move or up candles, and then there is a short bar. So if for example, now if you want to look for a buy, okay, what I want to see is, I want to see some sort of sellers getting trapped in this zone, and this should not breach, okay, 688, because if it does, we are again entering a territory where there were sellers, and there again would be some sort of interest that would come in. Of course, what we're seeing here is a high volume node, so there would be some sort of resistance. That is why this is the area below which this is a sell zone, and this is the area where I would like to go into a long. Okay, so let's see if we get some sort of a bar that we're looking for. The bar that we're looking for is something like this. Okay, so this is the zone that we have drawn, and this is another zone. So if we get some sort of bar there where we see a chunk of trapped sellers and the volume cluster that we have over here shifting downwards, that is the time we can go for a long. Why I'm saying this is because what can happen is when the market does move up, so okay, let's see what happens over here. The market does move up, it has all the chances of again taking resistance over here. That is why what we want is, if we have to enter, we have to enter somewhere here, because we know if 10 points is what we are expecting, we can expect resistance of sorts at 702. So our entry accordingly has to be planned in that fashion. And if we enter somewhere here, a stop loss is going to be somewhere close to 85 or sorts. So what we can essentially see is that this is a neutral bar. Okay, if you see, the volume is of course higher than the previous two bars, but this is a neutral bar. So now it is turned negative again. It is very minutely negative. So this is a bar which is not giving us any clue as to which direction is the one that can give us some move in a positive direction. So let's see if we can get one at this zone, a retest of this zone, and we can enter again. Let's see. We'll wait for the market to show its hand and then enter. So if we get a pullback and the POC doesn't shift, that is to the upside, and then we go below the POC is not a scenario that we're looking for. Okay, so something like this, if something like this happens, I am not interested in long at the moment, because I feel the market will I mean still go back, give a pullback, and then enter. Of course, I can be proven wrong if it just goes above this in a spiky move and goes on top. That's okay. So this is where I would like to enter a long. Okay, let's hold and see somewhere close to this zone where we marked. Okay, so 94 or 94ish is the level that we would like to enter. Let's hold. We're still waiting. Let's see the okay. So now if these sell imbalances are breached, we'll enter a long, because now I've seen the sellers enter and they're failing. Let's see. And I'm now seeing buying imbalances also come. So this is a zone that is holding, this POC is holding. Okay, so I would like to enter somewhere at 90. Okay, so that is my entry point. So again, the idea is simple. I have started seeing some sort of selling that has tried to come in and is likely to fail. I don't know if I'm right or wrong. And the stop loss again is somewhere close to this zone, 85. Okay, so the selling imbalances again stepped in. Maybe we are a little early, but it is fine, because the markets are moving today quite aggressively. For example, if you would have liked to enter a long here, the pullbacks are very short and the market immediately goes to the other side. So let's see what happens. But the idea is, you've got the framework. What I'm trying to tell you, it's that let's look at the time that is left for the bar to finish. If I'm not wrong, there's still 2.5 minutes. Okay, so the stop loss is somewhere here, 85. Let's see what happens. But I think we've moved below this zone, so obviously there is a high chance that our stop loss gets hit. We've not yet hit. Okay, let's see. And the other thing is, we should have waited for a confirmation, because above this point is where we get a good move to the upside, like we were discussing this place over here. So we are quite sure that as soon as it moves above 91, we're going to get a good move to the upside. We're still waiting. The stop loss is here. We're lucky that it is not got hit, but after it breaches the POC, the chances are really high that it does hit your stop loss, because maybe you've not timed it right, like we have not over here. So hopefully you've got the idea that I'm trying to get in. Okay, so if you want a bigger stop loss, the targets again have to be bigger. For example, if you want a stop loss to be somewhere here, the targets again, if you enter at 90, would be somewhere here. Okay, so approximately 12 to 15 points. So let's see what happens. Our stop loss is somewhere here. Okay, just below this big red zone. So people would be wondering why I have my stop loss here. It is because I have a red selling cluster that is over here. So I believe that if this breaches, I mean this point breaches, the sellers that were trapped here, or the buyers who came in to defend this zone, would not want the price to move this below this, is why I have planned my entry there. And you can see, what we can see here is clearly there is some sort of selling that is stepping in again and again from this zone where the sell imbalance is. Whenever the market moves up to this point, there are some people or someone over here that is trying to get the market down in the direction. So let's see if our trade plays out or not. In the meanwhile, what I'll try and explain is, the other thing that you can do is, so I think our stop loss is going to hit, and yes, it has hit. So it doesn't matter, it even if it does. The other point is, if you want to take a long again, let's say in the direction, or if you want to plan a long, now that you have a clarity, it is above this zone. Okay, 90, again looking for a breach or touch of 702, because this time there will be a lot of sellers that are getting trapped over here. So we'll wait and see if that happens. And what we're presently seeing here is these guys getting trapped. So let me see if we can get the buy and the sell over here. Where is the trade? Let's see if we can get the sim mode on over here and try a buy trade here. Okay, I don't know why it is not showing. I maybe the next time I'll get the sim mode on, we can practice it. Even you can do it, practice on the sim mode if you're new to this. So what we've essentially done is entered a long at somewhere close to 84, 85. Again, the reason is same. Why I have taken a long here is when the market approached, we tried a long over here, we failed, and the market has gone down again over here, and it has failed at the same exact point where these sellers were. So obviously the buyers that are here are defending this zone. So we can see this trade moving in that in a direction at the moment. And again, if you've noticed, where are we getting a rejection from? So there are of course some sort of sellers that are probing in and coming in again and again at this point. Okay, so this is a low volume node as well, so there is some sort of selling that is trying to step in, and we know for a fact that we cross this zone, we will get a very sharp move up to the VWAP. Okay, so let's see if that happens. Our entry was somewhere close to 85. We've already achieved 1:1. Okay, and we want to achieve 1:2 so that the trade that we missed out on, that is the previous trade, this one makes up for it and even more. So you can see it has broken that point, so you can now trail your stop loss maybe to 91 or 90, somewhere close to this place, so that at least you're getting 1:1. So we've reached 1:2. That was 95 was our 1:2. So we've touched 1:2. We've got against 5 points, we've got 10 points. And you can trail your stop loss. For people who want to know how to trail your stop loss, what I generally do is just below this sell bar. Okay, so this is somewhere close to 93 over here. We place a stop loss. That is because so it would have hit by now. Why I have done that is because this is the place where I was seeing some selling coming, and if it falls below this, I might see a pullback to this point. So again, we've discussed two trade ideas whilst we were discussing the markets, and we've discussed a scalping strategy based on again, this was a day which is not trending but moving in both directions. So accordingly, we first attempted a long somewhere, if I remember correctly, at 90 over here, which failed, and we gave away our 5 points. That was a stop loss. We again attempted a long somewhere here. The logic and the framework being that this is the zone again where we saw sellers, and the market attempted to break this point, failed, and then we saw buy imbalances come in, and then we entered a long again at 85 or so, and targeted 95. That is 1:2. Now in markets like these, if you can see, expecting, like I said, 1:5 is would be unfeasible, or it is not achievable, because you can see over here what is happening. If there are 2 bars down, then there will be 1 bar to the other side. So it is very, very difficult to attempt 1:3 or 1:4 in markets like these. So you can see another attempt. So even if you had waited, your stop loss wouldn't have hit. So this was again a good trade. If it works, it will give you 1:2, 1:3, and of course the probability is 60 to 70%, and that is all we want, because we're playing on risk management. So hopefully this video was of some help to you guys. Until next time, thank you. Bye bye.